Ladies and gentlemen, welcome to AfroSwing FX. Today I'll be doing a top-down analysis on several pairs. I'll start with GBP CAD, GBP Canadian dollar, and I'm doing these videos as part of my online course where we will be doing multi-currency and multi-time frame analysis. It's one of the chapters within the course. So I'll be doing GBP Canadian and four other pairs. So we'll start with let me just clear what's on my screen. So you'll go to your trading view account. You'll go to Google, get onto trading view, and in the description to this video I will also leave a link on how you can join trading view. They have a free package and then other premium packages. I currently am using the premium package. It's not the highest package, but it works for me. So we'll start with the monthly time frame, and if I zoom out, we will start with the monthly time frame. And the purpose of the monthly time frame, ladies and gentlemen, you start with the monthly to get the overall trend. Once you get the overall trend, you now move to lower time frames to try and improve and refine your analysis. So this will be a slightly longer video, but bear with me. The purpose is to get to learn how to do top-down analysis. So we'll start with the farthest time frame, farthest price positions, and we have a breakout structure of the monthly on this region. And if I clone the same, we also have another breakout structure to the downside here. And one thing you will notice after the pair came down and broke this structure, there was a correction. And the correction sort of stopped near this supply level here. So what we are seeing is that we had a break of structure pushing to the upside. Then the market came down, broke the previous low, formed a new low, and then the market had a correction, didn't break the upside. So we know that it's beginning to print a bearish outlook. And one thing you will notice is that once we formed this low, the market has been testing this low. Let me just mark this properly. Good. So let me call this a targeted region, because on the monthly time frame we do not have a clear break of structure. All that we have is, it looks like a liquidity grab, but you're seeing it never broke this high. It's pushing towards this low. So we can now do our notes on the monthly charts. Sorry. We have a bearish trend. Targeting the low, monthly low. Okay. So let us now go down to the weekly time frame. Let's see what's happening. Oh, and if you want to type your notes, you can just click on text, click on the screen, make sure you have border and text wrap. You can also have a background and change the color of your background to anything you want. And then when you type, it will just present itself on the screen like this. But mine, I've not put a background. You can just put a background. I do recommend you take your notes and type them on the screen, so that every time you open TradingView, you get to have a background on what you're looking at before you even start trading. So we go back to these charts, and we have noticed that this is now, it was a liquidity grab, not necessarily a break of structure. But if you look at this key level here, let me put it as a break of structure on the weekly. And the reason why I'm focusing on this key level is, if we start here, we are seeing the market keeps printing higher highs. Let's call this a break of structure on the weekly. Then we will clone it several times. So it formed this high, then this high, then this high was formed here. Okay, so it was this high, and then we have a break of structure here. This is the swing structure that was broken, and after this swing structure was broken, we formed another swing structure here that was broken, and then another swing structure here that's we have no idea whether this was broken. I'll just extend it once we get to that point. But if I come in again and check this level, let's call this a break of structure on the weekly, and then we clone it, we put it here, then we also clone it and put another one here. You'll notice that this low formed this high. So now what we have is we have something called a change of character. It's another form of break of structure. And you'll notice this change of character, or let me even call it a break of structure on the weekly. In our previous lesson, we learned that the last bullish candle before the break of structure can also act as our supply. And I want you to see what has happened. The market has simply settled there. Okay, then we formed a new low. Then we formed a new low here. Then this low was broken. We formed, let me even drag this here. We formed another low. We formed another low. So when there's a break of structure, I'll also drag this. Kindly note that this bottom, let me just mark this as targeted, but also give it a different color. So if I zoom out, this green, the targeted green level, is for the main structure. The reddish targeted level is for the internal structure. So if we happen to break both the internal and the external structure, it's confirmation that we will still push to the downside. Of course, we'll have correction, but we do not know when this will happen. So once we had this break of structure here, we also learned about market imbalance. And if you look closely, we have a form of imbalance seated up here. This was once an imbalance. So before the market corrected, this was a fresh order block. This was a fresh order block. But once the market broke through this level and corrected, it was targeting that fresh order block and converted it to a supply. So now we know it has cleared the imbalance. It's looking now to continue its bearish trend. So we'll take our notes and update our notes. So on the weekly charts, we have a, let me call it, we have a bullish correction that has cleared a previous imbalance or inefficiency. Good. Save. Or okay. So we're beginning to write a narrative. We're developing a narrative, a story for this pair. So if we go down to the daily, charts, now things become a bit interesting here because let's call this this is for the next lesson, but let me just mark it as a break of structure on the daily. I will clone several times. Good. And then we have this high that was formed. Okay. Actually, that's the one I should be cloning because it's longer. So let me clone. So we also formed this high. Then we formed this high. And then we also formed this high. Now, remember that this was our fresh order block stroke now has been converted to a supply. And we learned that in the previous lesson. So this low has formed this high. So now if I drag this here, we have something called change of character. Change of character on the daily. So the change of character tells us this is a reversal. And every time there's a reversal or every time there's a break of structure changing the trend, we have a correction. Now, after this break, the market came back to clear another form of imbalance that was seated up here. We are likely to see it on the 4 hour, but let us just retain that supply. So what is happening is that let me just use an arrow to demonstrate. We have an upside break of structure. Then the market hit this level and then broke. So what we are expecting is a correction and now a change of order flow and market structure to bearish, and that is what is happening here. So presently what we are having, we had this, then that, then that, then we've had a break or a change of character to the downside, and we have touched this level. We have not broken this level, ladies and gentlemen. We don't see, we don't, it doesn't look like we'll break this level. So what is happening? It looks like we will push to the downside. So let's see. Let us now update on the daily. We have a change of character, indicating a trend reversal. However, on the lower time frame, we have a bullish correction. Why am I saying we have a bullish correction? We had a change of character, now we're having a bullish correction. If we switch to 4 hour, and we'll not look at the other side, we'll not look at this side of the screen, we are going to focus on this side. We are going to focus on this side. So why I'm saying the market came back to clear an inefficiency, we had something seated up here. It was another fresh order block. Let me mark it properly. So up to this point, this is a fresh order block. But as you extend it, the market has come back and it has cleared that fresh order block. Once the market has cleared that fresh order block, it has no reason to keep going higher. So we have to find a way of now reversing this trend. So let us go to the 4 hour. So we are on the 4 hour chart. Let me use, instead of using those break of structures, let me use an arrow. So if I use this as our last low that formed a high, we have a change of character. I'm using the arrows instead of proper break of structures because I don't want this video to be excessively long. I just want you to use it for purposes of learning. So if you look at this, we have a change of character on the 4 hour. So what that signifies is that definitely we have a change of trend. So we had this change of character on the daily where we have a correction. Now we have a change of character on the 4 hour, and we expect now, and the market pushed lower. And the market pushed lower, then came back to this level to clear an imbalance that was seated up here. To clear this imbalance. It was an mitigated order block, now it has become a proper supply zone. A proper supply zone. So what we are waiting for, in the coming weeks, I think on Monday we have a claimant account for GBP coming out. Let me just clone. And then we clone. So presently, if we break this low, if and when we break this low, ladies and gentlemen, we will be waiting for this pair to touch new lows. And let me just push to the daily. We will be waiting for this pair to push even lower. So we come back and update our notes on the 4 hour. Are awaiting a change of character to signify a bearish continuation. So that's how we'll do our top-down analysis. So for this video, I may not necessarily tell you where the take profits will be. Uh, if you happen to take my course, I have notes where I have shared with you notes or videos on how to identify key levels where you put your take profits. We have liquidity zones, we have fresh order blocks, we have unmitigated order blocks. So all those represent inefficiencies and imbalances where the market goes to clear. So that should be where you set. Generally, that should be where you set your take profit. So thank you for taking your time. Do like and subscribe to this video. I'll also leave a link on the I will leave a link on the description of this video on YouTube for you to sign up on TradingView. Thank you very much.